Traditionally, there's been very high barriers to entry to banking. But when you look at banking, you can break it down into a number of different business lines, most of which don't actually require a banking authorisation. So if you are a clever, tech-driven financial services disruptor, you can come along and pick a particular area of something which was once something that only banks did, provide that particular line of business in an extremely efficient and user-friendly manner, and pick up a decent chunk of the market share. And that market share is typically coming from the banks.
So there's 5 main areas that are being touted, if you like, as being the areas where the incumbent players need to be concerned. And those 5 areas are in consumer finance, lending to small and medium enterprises, mortgages, retail payment systems, and wealth management. And the types of fin technologies that are impinging on those areas are things like crowdfunding, blockchain, artificial intelligence, robo-advice, those sorts of technology. And what it's really, what those technologies are driving at are acquiring customers in a more efficient manner, making those customers more loyal through the tailored online experience that they get, and ultimately that will potentially impact the revenue of the incumbent players. And the kind of numbers being bandied about are between 10 and 40% on those 5 core areas that I mentioned. But if you then take into consideration the impact that blockchain may have on settlement processes between intrabank payments, that could actually take the impact on bank revenue up to 80% within the next 5 years.
Right from the beginning of when you purchase a financial product, right across to the end of your holding of that product, a lot of different people have been involved in that process, from the financial advisor, salespeople, marketers, custodians, fund managers, research houses. Everyone is getting a piece of the pie in that chain. And what fintech can do is it can just cut certain people out of that food chain.
So tomorrow, when somebody comes up with a product or a technology which is data intensive, which is platform based or connectivity based, and which is capital light, right? That will represent the biggest challenge to banks.
I think what fintech is doing as a category is it's forcing organisations, the traditional incumbents, to rethink their strategies in terms of how to best serve customer. You and I today expect different things from the financial institutions that we work with as a consequence of the experiences that we have in other industry segments.
So I actually think that we've got a very progressive market as far as incumbents are concerned here, which means, and they've still continued to respond very well to fintech, even as a result of that. And I think that means 2 things. I think one, it means that for fintechs that start in the Australian market, they've got to work twice as hard as in another market to gain traction. And secondly, I think that there's a unique opportunity in the Australian market to really develop those collaborations between banks and fintech companies, which in some other markets are more difficult to establish.
So within the financial services stack, you can sort of look at sort of vertical product lines like SME lending or payments or what have you. We think that they're going to be fairly near-term improvements in the quality of the service that's offered. They're probably not long-term disruptive to financial services. If you slice the stack horizontally and look at different kind of layers of the stack, like data, like the network that payments operates on, for example, blockchain, those layers in the stack could be massively transformative, we think, to financial services, probably over a sort of 5 to 10 year time frame. And then, to be honest, sitting above the stack, so the clients that financial services firms service, there's a lot of change going on in those, in that layer as well. So whereas previously financial services companies might have been serving a very fragmented base of customers, they're now facing these giant customers that they have to negotiate terms with. And some of these customers have tremendous market power because they've essentially integrated financial services, some of these players, into what they do. The Ubers of the world, the Airbnbs, all of these sorts of companies are integrating financial services into what they do. And, you know, for banks, it's going to be a real challenge to ensure they don't just become a utility in that exercise.
One of the other big things that the banks have to worry about is the speed and accessibility that consumers are demanding, you know, in this increasingly technological world. It takes a long time to move your money from one bank to another. Like even within Australia, to move your money from one financial institution to another, it can take 2 or 3 days. And to transfer money internationally, you know, it can take almost a week. If some fintech firms that, you know, perhaps use blockchain technology or something like that, if through one of those you can transfer money instantly and for next to no cost, then that's a huge problem for some of the international wire transfer financial services institutions.
Settlement for a trade from T+3 down to T+1, you know, all of a sudden you're saving costs, you're reducing exposure to market volatility, currency movements, all these type of things which the market has traditionally absorbed throughout sort of the traditional settlement process. So by doing that, you're freeing up liquidity within the actual market. People can have more confidence when they go into something that, you know, the cost of what they're agreeing to pay now is actually what it will, sort of how things will operate in a couple of days' time. And, you know, that is, I think, going to open up new opportunities for stuff. It's probably going to create some concerns as well. And there's been a lot of markets which have actually developed on the basis of this sort of 3-day or 5-day, 4-day period, whatever it is in different markets. But your repo market in places like this, where you can, you know, players are going short in the market or going long in the market, they're playing a different sort of arbitrage opportunity. If we're getting closer and closer to real time through blockchain or any other technological advancement, it might sort of deflate some of the focus on some of those other markets as well. So opportunity for some sort of, maybe threat's probably not the right word, but, you know, a challenge.
Effectively, you don't need large financial services institutions to exchange value. So that kind of technology, actually cutting current players out of the loop, is an example where the disruption could be at its greatest. Of course, again, the players who are most able to get into that space and deal with that kind of technology are often the financial services players.
The payment solutions are the key threat and the key opportunity. The banks are struggling with at the moment, and the payment organisations, is how do you make that secure enough so that it's absolutely able to be used. They're really trying to ensure that the security is there to enable these technologies to be used in a more mainstream market line. But, you know, in a market where we're getting smaller and smaller retailers, people setting up shop, some very innovative, a number of people, you know, online only, that sort of technology is very, very powerful.
You know, wallet technologies, you know, are very, very quickly, you know, becoming the norm. So if you really think about where, you know, a lot of the innovation had started out, it was largely in the card, you know, based environment on the consumer side. And we're now seeing that wallet is becoming, it is the fastest growing segment of that. And the fact that Apple, you know, came into the space is really, you know, acting as an accelerant.
Well, actually what the banks are saying that what they have to disrupt is cash. So cash is the thing that everybody's trying to disrupt.
So when we think about, you know, innovating in the space, I can really tagline that as being, you know, going beyond payments. So the whole notion of payment being what we do really is now essentially blending into solving a much broader set of problems for businesses, and that's really, you know, fundamentally where, you know, we're headed as an organisation. I think the whole language about payments market is just going to morph into being integrated into something else. So I don't think we'll be talking about payments market. I think we'll be talking about maybe payments technologies as part of something else. So, you know, today we sort of see it in contextual payments. Again, you go back to the Uber or the Airbnb style experiences. I see that becoming more and more pervasive through industry, and I see that happening as part of, you know, doing business commercially, and we're helping drive some of that ourselves. So I think that's definitely the case. And like I said, as we move forward, that financial service really is just going to be an integrated part of a broader interaction or workflow.
The real sort of, I guess, threat is whether banks can sort of keep up with the development in technology and miss out on the unbanked market. In Asia, we've got 1 billion plus individuals who are unbanked. They're going to be digital when they make their sort of first banking choice. So I think for financial institutions to keep up with the space, they've got to be looking to offer user experience and services to those types of individuals.
If you think about financial inclusion, the banks will not need to establish branches. With the financial technology and fintech companies, they can reach to more people and get more customers without establishing branches. And this is important for Indonesia because Indonesia is probably the biggest archipelago country in the world.
I think there are quite a lot of disruptions going on, and many of them have potentials to really limit the roles or relevance of the incumbent players, right? But at the same time, it also can create opportunities for them as well. Chances where the existing pie of the banks or the incumbent players could be taken away from the innovators. So I think this leads to the banks or the incumbent players to really think about the strategies, how to deal with this. In Thailand, we've seen banks starting to really take fintech very seriously in a way that they set up their own venture companies to really roll out the fintech products specifically, and to also invest in other fintech companies as well.
Because there's so many channels, it's very difficult for a big institution to be able to do all that themselves. So there's a part, and I see companies like ourselves at Rubik as that intermediary, that we help the big financial institutions execute on the stuff that the startups are doing. So we sort of bring the startup mentality to the banks, but have done a lot of the harder work for them.
Today, I think Maybank, which is one of the largest or the largest Malaysian consumer bank, they introduced a contactless wearable, right? So it's like a band, it's a pay band, which you just wave and, hey presto, right? Your transaction gets paid. So, so it does try to, introduce new products into the market.
They are finding ways to collaborate and to be part of the scene rather than feel all threatened about it. Yeah.